when it trades back above it, gives us a commercial buy zone. And then into this area, we've got the same kind of thing. We've got a double distribution down into a buy zone here. Commercial buying becomes a very obvious kind of buy area inside a buy area. It's like a doll inside a doll. It's a Russian doll inside a doll here. So we can see this idea of the fractal nature of the markets dropping down in size. And we come into that perfect area after selling off of the exact same at the top edge, a commercial sell trade. And we get this brilliant sell-off. Now, a lot of people wonder why we ended up where we ended up with. China potentially could be the reason. When we talk about China, we're talking about strong bids and offers, aren't we? We're talking about China buying stuff. Well, when we're talking about China buying stuff, can we see the China line for a second? Let's see what happens. Did China look like they were interested in buying stuff, guys? When we add the China line to our thoughts. Well, take a look and see what you think for yourself. Did China look like they were interested in buying anything? Damn right they looked like they were interested in buying stuff at lower prices. You can see as we came down into the bottom edge, China were slowly starting to grind higher. Great opportunity to accumulate massive amounts of stuff in here. And then they ripped it hard off that bottom edge. Massively. Ripped it hard off the bottom edge. Brilliant trade. Now, we've traded against China here, but they're not going to buy unless it's at low prices. They don't buy everywhere. They just buy at lower prices. They can afford to wait. If they don't put a bid in, the market sinks, doesn't it? Here's the bonds back into the lows again, guys. That's okay. And that's okay. We can get another read. I'm watching to see if the belly stays protruding at the top edges, in which case I will be interessante and buying some bottom edges on this one. Some nice program sells on the NASDAQ there. We came below the 15,350 level and the program sales came in, but we hit the most recent arbitrage level down into the 35s, 34s, 33s, and you might have fancied that for an exit for any short business you had, because we hit the arbitrage level. This is the lowest level we've had since well, the previous low, of course, and that gives us an idea that this is an arbitrage level. There's going to be some buyers coming in at this price. Whether it's good enough to take the market bid, we'll find out, but I certainly bought some, and I've made some money on the long side of that arbitrage level. Do you all understand what an arbitrage level is? This is what an arbitrage level is. It's the highs and the lows. It's not what you see from the garbage that you get from these ideas of this is where the arbitrage will come in. That's just nonsense. It's where you actually see the reversal coming in. That's what you're trying to trade. That's what you're watching for. Do you understand? Yes? No? Anybody? Comprende? So what I did, obviously, in that location, just so that I could show you what we were doing in that location. So what I did in that location there was this. You can see that that location there at 1518 is this area here on the charts, isn't it? So I started to buy against that pin rejection right there. And obviously we managed to get an easy money reversal right off of that price. Yep, purely where we see the rejection, Simon, because the market's buying this line at that point, right? It's not some sort of previously fixed line. The lower it goes, the bigger the arbitrage is, but they might start buying the arbitrage a lot earlier. So when we know where the price is reversing off of, here and here, for example, for sales, we can see that the market is using those areas to reverse the price off of that print. So when we see that the market's using this price to buy into, then I simply come into that print. You can see in the background, I just watch and see that that is the possible opportunity for a reversal trade. Possible opportunity for reversal. Because I know the arbitrage guys have already bought that price before, right? Arbitrage he's bought that price before over here. So when we see the arbitrage guys buying that price, I've got a higher probability of being able to buy that price and make some pretty easy reversal money. But that's a fade, remember. That's a fade on the downtick. So you've got to be careful with that, Simon, right? But yes, absolutely, this is what I'm looking at. I'm watching to see that they're selling the arbitrage. They are selling the arbitrage, whether they get a level or whether they don't get the level. They sold it. I'm not making up this level. I'm just watching and responding to them selling it. So I've already seen them buying this price here. I've already seen them buying that price. So if it gets down into that area, I'm aware that they bought that the last time for an arbitrage. So if I'm aware they're buying these for arbitrage and they're selling these for arbitrage, then these levels are good levels. So anytime you get a new higher print, you just draw the line on the screen. Anytime you get a new higher print, draw a line. Anything into that area could bring an arbitrage seller. Anything into that could bring an arbitrage seller onto your screens. So that's what you're looking for when you're trading these, and that resulted in this buy trade that I took off the low print on the Qs. You can make a whole career out of this, by the way, Simon. Literally, you could make a whole career out of trading these arbitrage reversals. Parallel steepeners, guys. Bonds will keep going for as long as they want to keep going. It's a tough buy at bottom edges, guys. We told you that earlier. Parallel steepeners. That was a hell of a sell-off in that 86 gold now, wasn't it? Hell of a sell-off. 86 gold, 73s traded, $1,300, guys. Woof. Loving that stuff, right?